into the long setups first. Strong stocks looking for continuation. The first name on my list is AEP, and basically this one right here is it's just a giant if-then statement, because right now there's no trade in it. I need this to get over this 101.80-ish. What is it? 101.61. Needs over 101.61, and then I would be willing to look to get long on a retest of like this 100 to 101 area. Just a retest of the flag that it's breaking out of. I do see that as over 101.61 is a really big trigger. So if it can get above that, it's going to have some resistance from these prior highs. I'm hoping that we just get that flush back down, and then it starts to put in a trend, and you basically just want to join trend on dips with defined risk. That's the way I want to play AEP. Next name on the list is CVX. Again, like I said, guys, some of these oil names have good range and good liquidity, and they're good to trade. CVX, it's just like AEP for me. It needs over 171, and then I want to watch for a retest of that 169 to 170 area to get long, joining trend, risking previous lows. Again, define risk, and if something's going to trend, a lot of times you can let that pay you out, again, multiples of what the risk was, and that's really the point, okay? And so that's it for the strong stocks looking for continuation, right? I know it's crazy, but there's just not a lot of stuff out there setting up for this setup, right? But we do have the oversold reversion setups, and we have plenty of those because of where the market's at. Everything's been selling off. You guys saw what we were just looking at with the sector ETFs. The game plan is, if it's in a sector that has some downside extension, we're going to play against last week's lows. There's a lot of individual names that should have setups that are similar. Some of these names are same names from last week, guys. They just haven't, they haven't done anything to really get off my radar yet. So EXPE is the first one. So there are two things I could see happening here. Maybe we gap fill down here around 107, and there I might get interested again, especially if it does it, if it speeds up. Even if it were to come down to 116, right, and just come back to this recent support where that gap started. Guess I can, hold on, I could just move this thing down. If I could click it, there we go. So right there, you get that. That's where the gap started. Here's where the gap would fill. If we flush down there, I'd be watching it. But really, I think what the play for me is I want to see this break above, is that Wednesday's highs? Over Wednesday's highs, and I think you can probably look to join trend, and it could even be a swing trade, right? The plan here is that this is possibly going to push back up into the underside of the 20-day and the monthly 20, which is right up in that 159 area, right? So if we're going to take this from 137 up to 159, that alone, even if you're risking the lows, is a decent risk reward. But if you're patient, we break over that level and you buy the next, it doesn't have to be on Monday, right? We might break that on Monday, maybe retest it on Wednesday, come back down and test some levels where there's some support. That's where I'd like to get in, because then the trade's going to be much more asymmetric. We'll see what happens. It's going to depend on how it behaves, but still looking pretty oversold down here. The next name was also from last week's list, and that is ICE. Basically thinking you can play against last week's lows, just like we were just talking about. So any kind of flush, I'm just trying to get better prices, right? I don't want to chase it up here and then have it roll over and finally give those better prices. I think the name of the game this week for these setups is patience. Do not be the person that sees it gapping up and going and chases it only to have it roll over and the real play be on Tuesday or Wednesday. We want as close to Friday or last week's lows as possible. That's the name of the game this week, guys. Next name on this list is LYFT. Again, playing against last week's lows. I think it's worth a shot to try to buy this in the 1820s. Same thought as on ICE. I think the turn is in and the risk is defined. What does that mean when I say the turn is in and risk is defined? Well, we're making a trade thesis that the turn is in, meaning this is the near-term bottom. So there's only two things that can happen. You can be proven right, meaning we never break these lows, and any flush down is an opportunity to start a position on this, thinking that this trend will reverse and we're going higher, or we're wrong and we know where we're wrong and we stop out. That's what I mean by define risk and the turn is in or it's not. And the last two names on this list are the big boys, and that's because These ones, I know a lot of institutions are looking at, like trying to figure out when is the right time to be buying Apple. I think Apple put in a turn here. It was a key level on the daily chart. Made a lot of sense to see this bounce from right here. And I'm looking at any kind of flush down into 140. Like I'm begging for some 140s, something where I can keep the risk mitigated. I don't want to be chasing this into 150, seeing that that's a key level for it to possibly reject, have it reject in my face, and then, you know, the trade happens later. Don't wear yourself out taking unnecessary losses because you're FOMOing into trades, guys. Patience this week, please. And the last name in this list, like I said, is another big boy, and that's Microsoft. Exact same thought as Apple. Lots of institutions are going to be looking for that opportunity to get something on this trade, even if it's just for a few days or a week or so of a swing on this. There's going to be no shortage of people trying to get involved on the long side on these names. So again, I'm just going to have to create a trade thesis. If this, then that, right? If the low is in, then I want to buy scoops risking those lows. So the thesis is here is the turn is in, risk is defined. Any flush down to 250 is going to be me getting involved for sure on this. And that's Microsoft. Actually, I might even, the level I wrote down was 253, and I'm assuming that's going to have come from the low on, let's see. No, it was actually, let me pull it, zoom in a little bit on this 5-minute chart. It was this early pivot, it acted as resistance, and then we got back above it. So this 253 area is kind of key for me. I may take the trade there with full size and be prepared to stop out and try it again against Thursday's lows, right? I don't want to be buying this early weakness at a level and you know, trying to add down here, because what I'm going to end up is I'm going to end up with too small of a position size at the first spot, and then, you know, if it works, then I never had I didn't capitalize on the opportunity. And if it goes against me, now I've got a trade that's not working and I've got more size than I wanted. I'd rather take it full size 253, stop out. If it doesn't work, try it again off 250. That's Microsoft.